Well, good evening, friends. It is Sunday, April 6th, 2025. I am under the weather once again, but I wanted to give you guys a couple ideas of mine. As we know, the last 2 days were pretty massive sell offs, 5% down 2 days in a row. Are we going to get a third? Let's go ahead and switch over to futures and see where we're at here. Yes, we did have a gap down and a terrible gap down. Let's look over at Dow Jones is down 1,500 points at open. Look at this massive 1 minute candle from 37,760 to 37,100, losing 600 points in 1 minute. And then we have a beautiful 3-bar play right here and another push with an equal move down to 36,800. That is a massive drop. If we zoom out a little bit here, we can see that that's a massive gap down. Now the question is that the bottom? When do we start buying again? And what are we looking for? Because this is absolutely nuts. We haven't seen this since the COVID crash, which, just to put into reference here, was way down here on the S&P 500. Just to put into perspective where we were and where we are. So this was the COVID crash of 2020. This is where we are today at 5,000. S&P, SPX, we went from 3,300 down to 2,100, so a pretty massive 30-something percent drop, 33%, I'm guessing. I don't do math. I'm not an expert. All I know are a couple things. I know what's going to happen and what should happen. I don't know when it's going to happen, as you have learned from following me. But, like I always say, never wrong, just early. So, we have been predicting since December 16th. I said, look for topping. We have a beautiful reversal up here. If you were to catch this ride, I'm going to do something real quick. I'm going to delete everything and start fresh after I screenshot my notes there. All right. All right, let's take a look at the S&P this year so far. So, let's mark off, we've got election night, right? Election night was here. The beginning of the year, January 1st, was right here. Area. And January 20th was Monday, right here. So, everybody says Trump is responsible for killing the market. I am curious to see what happens here in the next couple days. But here's what I do know. Technical analysis is always spot on. And here's what I want to show you. So we did have a epic crash here, right? We are having an epic crash here. This doesn't go back to 2008, I don't believe, but let me check. Yeah, it does. Okay. We didn't really have an epic crash until later into the year. But here's the deal. There's many things I want to talk about. Here's some things I want to talk about. So, first, what does topping look like? Let me get my magnet off here and zoom in. What does the top of a market look like? Usually looks like something like this. They put in a flat area. I'm using very common language, right? They put in a flat area. They come up and sweep that area. They catch any buyers who want to buy, and then they just rip it down, right? If you look at this initial drop in 2008, I want you to pay attention to what they did here. This low right here, now I'll put my magnet tool here. This low right here did not get touched during SPX, during open market, the day, right? During actual open trading hours. So they put in a top, they broke above it, they failed, they came down, and they did not break the prior pivot. If you followed me for a while, you know, if they come up short of a number, that means the next time they're going to push through it, right? So you would have known in 2007 that by failing short of that we want to, once again, sweep these guys, fall. These guys that got in here are now going to be sellers also, and will give you the momentum to break through that, right? It is called a trap, right? They have trapped people. And then from there, you can see how far they fell. So imagine that this is where we are right now, because this is the first leg of many in the bear market, right? So let's take that idea and let's go. Now 2020 was a little bit different, but you could argue it wasn't. In 2020, if you zoom out, you could say, here's a flat spot here. You could argue, make the technical analysis argument that they swept it and they broke it. And what did they do? They broke the prior pivot. When they broke that prior pivot, they had everybody and their mom and their grandma who was trying to short the market trapped. And what did they do? They did not let go. They did not give they didn't give us W, whatever they were, Jerome Powell was trying to say, a W-type recovery. They did not give them a chance to get out. So we saw massive squeezes in 2020 and 2021 that just did not stop because every bank in the world was shorting the market right here. And what happened? They broke the pivot and then ripped and never looked back, right? So let's look at 2022. We have the same type of idea here where we had a this is a daily chart, but we had a pretty much flat area here, right? They came up, tagged it a couple times. They finally broke above it, and we will talk about inversion gaps here soon. This little area right here where there's up, move, chop around, and then down on a straight candle, and there's no overlap, right? This is extremely, extremely important to remember. But what did they do? So they came up, they swept those people, the people that were up here that were buyers now were able to sell, and they pushed the market down, right? Then you go to 2025. Here is the flat top. They came and swept it, they broke above it, and then fell, right? Here's the deal. They did not bounce. So here's an example though. Let's look at this pivot. So they came up short of this pivot. So what are they going to do next time? They're going to break through it. But what did they do with this pivot? This is extremely important. They broke right through. They closed below it. Meaning, because they did not break through it, there are going to be buyers down here buying this market up. namely the Federal Reserve. But anyway, there will be buyers down here because they did not come up short of a number and bounce early and then to break the next one. So, what's going to happen down here? Buyers are going to load and push it back up. And anybody that got trapped up here, they're going to try to get all the way back up here to 6,100. Today is Sunday, April 6th. Quote me on that. We'll see what happens. Now, here is something else to consider. I have been following something called ICT, for the last couple of years now, understanding his methods, and I am by far not an expert, but here's what I do know. The market always finds balance. Let's start over real quick here, and then I'm going to get to copper. But I have to teach you this idea first. All right, let's start over. Okay. Let's look at 2008. In 2008, now this is a monthly chart, right? So this is 2008. The market is always looking for equilibrium. That means an equal number of buyers and an equal number of sellers. Let's take squares here. If I can find my tool, here we go. Drag my toolbar up here. So you would consider this area an equal number of buyers and an equal number of sellers, right? So this area is fair value. Now, this area from here, if this is fair value, then that means there's no reason to really trade back into this area. There's balance. So they want to push on to the next area. So they push on to the next area here, right? The problem with this is, if you look at this tiny little candle, here was the high of 2000, 1550.84. Look what they did. They did not come up short of the number. They tagged the number. The high of this month was 1555. This was 1552 was the high, 1555. They did not come up short. They ran into the number, which means they're not going to break it next time. They did not come up short. When they come up short of a number, then they can break it next time. If they run into the number, it's going to be a rejection. Now, because this was a fair value area, there was no reason to trade in this area. So the next logical place would be, whereas unfair value would be below this area. So where did they run? Below this area. They ran from above this area to below this area. Fair value, right? They're looking for unfair value. Buyers wanted to buy down here. They didn't want to buy here because this is all fair value. They want to buy underneath a fair value area. So what did they do? They bought under the fair value area and then ran it up. Now, you can look here and see they did come up a little bit short of this so that they were able to break it the next time. So we can consider this entire area now fair value once again. So now we know that this area is unfair value. They will not trade back into this area again. They were able to break above this area, and there was no reason to trade back down here. so they could continue higher. So they went from there to there to there. Now, every single red area here, let me go to 3-month. This is a little bit easier to see the larger picture. Every wick here on this candle, see this little line? This is a wick. The body, the candle body, is the solid green. The wick is where an equal value area occurred. So let's mark this off. Let's make this bright red. So from that area to that area is an unfair value area. There's only buyers. There's only buyers here, right? Fair value gap. This area right here is an unfair value because, see, this wick means there was an equal number of buyers and sellers, right? This overlaps this one, so that's equal. This overlaps this. This overlaps this. Sorry, no. All of this overlaps. Everything overlaps, overlaps, overlaps. So from the top of this candle all the way to the top of this is now considered a fair value area. So there should be no reason to trade back into this area, right? Unless they were going to sweep it, which they just chose not to at this point because the Federal Reserve was printing. And why would you want to go back to that when greedy people can make money, right? So, but all this area was fair value, and I want you to take a look at this. This area right here inside was also from this to here was also fair value. And what did they do? If you can barely see it, they tagged the bottom of this fair value area. I don't know if you can really see that, but they just broke below it right here and then ripped higher because this was distinguished as a fair value area because all of these tails overlap, right? So let's keep moving on. So now we have alright, so this is fair value, this wick is fair value, this wick is fair value, but right here we have a fair value gap, right? In this little area right here on this candle, because this wick does not cover this wick. There is a gap, and that is unfair value, right? So, however, this wick is fair value. So, they could take this wick and go all the way up to here and find that this was a fair value area, right? But keep in mind, we have a gap right here. Let's keep moving on. What happens next? COVID crash. What does the COVID crash do? It crashes, fills that fair value area gap under here, and then we haven't seen the end of this move. Just absolutely ripped, right? So now this whole area is fair value. This whole area you can extend down to this red candle is now fair value. And we know that this is fair value because of these wicks. So this is fair value. So all of this is fair value, right? It's all overlapping. We can remove this. Let's keep going. So this area would be fair value. Right here, this wick. From here to here, this is fair value. This is fair value. This is all. So that then you start to see the gaps, right? So from here to here is fair value. This green candle from here to here would be unfair value. What did 2022 do? They came down and swept this area, found this fair value gap, filled it, closed almost perfectly in it, right? And did not need to go down and retest this area because this is already fair value. So you would buy right here, right? So now this is complete. We can delete this. We can move this all the way up to here. So this entire area is now fair value. Now we're talking. Because where is unfair value? From this high to this low is a fair value gap. Right? This area right here. There are no overlapping candles. Now, this area is fair value right here. This is fair value because it overlaps with this wick. This is fair value. This would have been a value gap. However, it didn't hold, and so what did they do? They came back and filled it in with this candle. So now this is fair value, this area. So knowing all this, and so when did we say this? This would have been December, January. I said there is a fair value gap down here that has to fill. We will return back to this prior high, right? It has to fill. So here's what I'm thinking. Let's go down to the 4-hour chart. So now we have our areas of where they're going. On SPX we have 49.53 and 48.18. So what they should do, since they've already broken this low, I should make this bar a little bit easier to see. Okay, I'll do it just so you can still see where it is. So this is unfair value, right? This area is unfair value, value gap. Now, because they broke this, they should spring back up higher. Here's the deal. If they spring back higher without tagging 48.18 and filling this area, then we will know, we will know they will return to this area in the future. So we can use this, because if we start seeing a bounce, where'd my pencil go? We've broken this. If we see a bounce here and it starts to go higher, then what's going to happen? They're going to look to sweep the most recent fair value area and then continue lower. The most recent fair value area is right here. This area, where there is an equal number of buyers and an equal number of sellers, right? I can't get it quite up to the top there. I don't know why. Anyway, you get the idea. This area. So they're going to sweep this area and then continue lower because they technically came short of this number. So we can make the argument that we're going to have a rip your face off rally break 58,800 and then continue lower to fill this gap, 48,18. If for some reason they come down into 4800 area, then there's no need to sweep this area. And when they go higher, they won't need to stop. So if they come down lower, break this, then there's no W recovery needed. You don't need it. So this, just to be clear, we broke this. So this will either come up, sweep this area, trap some more people, and then push lower. Or, if we continue lower, it will continue down and then reverse and not give anyone a chance to get in long. Because this area is fair value. There's no reason to trade into this area. Likely what they'll do is they'll sweep this very first fair value area, this little dip here, which would be around 47.15 area, and then just rip and be done. So there's two scenarios so far, right? They come up short and they bounce. The Fed comes out and says, we're going to save the market, and they rip it. 5,800, you want to think short because they're coming back to 4,800 or lower. Now, that's two options. Here's the third option. We still have an unfair value area that has never been filled at 1,600. You can call me nuts if you want, but I've been calling this one for 4 years. That we will be back to 2008 levels soon. Here's how we'll know if that happens. Either they will create what we talked about, the first scenario. Either the first scenario happens where they bounce, sweep this area, possibly even sweep these highs one more time, find out up here that there is unfair value up here. Here's the deal, like this is so important. If they don't fill this first and they go here, it's bad news. It's very bad news. If they come all the way up here, they're going to find unfair value up here, and they're going to shoot back down to this area and fill this in, because they have to fill this in. They absolutely have to. The only way they won't is if the Federal Reserve turns on the printers again and just starts printing recklessly. That will also blow up our economy. But this gap has to fill. Here's the second scenario. A fair value gap can also, like I said earlier, create a up, like a move up, chop around, and move back down, and leave an area, leave a straight bar up, move over, and a straight bar down, right? Like we saw in I don't remember what that was, 2020. Anyway, oh, it was this one. See how see how it went straight up, chopped around, and came straight back down? This created an inverse fair value area, right? Because there's no overlap. It's not like they're making stair steps or triangles. It's like they went up, across, and down, right? That's the sign of a topping of a market. Here's the deal. If you zoom out, we may have that scenario developing. And that's what's really concerning here. Because if this does continue and gaps down below 4,700, 4,800, then we have a serious issue. And what they will do is they will likely break down, come back up, find resistance in this fair value gap, sweep it just a little bit, and then continue lower, right? And you could see all the pattern traders would call it some kind of a head and shoulders or something, whatever. That doesn't matter, because where's the next fair value area? It'd be down here, right? The problem is that's already filled. This one's already filled. This one's already filled. Where's the next one? Next unfair value area. They would fall straight through this entire area without taking a break. Just like in 2008, they fell without taking a break. All the way from the top of this unfair area down to the bottom of this unfair area. The only unfair area on this chart is 1600 S&P. That would be just absolutely nuts, right? So call me crazy, whatever you want. That's my prediction for the market. We're going to watch this 4,800 area. If they spike it, then it's good. It's a good area to go long, because you have an overlapping unfair area here inside of a fair value area, and this area is going to be like a trampoline for the market to shoot off of. So now, so what do we do with that? Let's go back to the 4-hour chart. Let's see what happens. Let's take a look at futures real quick just to see what they're doing right now. Futures are a little bit different because their contracts are overlapping sometimes price. But here's the main thing, right? They've broken the most prior high without taking a break. They found a fair value area. There's my tool. Found a fair value area. They found someone to trap, which would be the people who put their stops below here. They've come into this fair value area that's inside of a fair value area, and tell me what happened here. It's become a trampoline to bounce off of, right? You want to see something crazy? Tell me that price is unpredictable. Where did they bounce from? I didn't do this yet. Tell me where they bounced from. Exactly the midpoint of the last fair value gap. Exactly the midpoint. Tell me that technical analysis doesn't work. So, they're already bouncing. They broke that without bouncing early, so likely they should be up above, close here, and people that bought futures are going to be in the money pretty good tomorrow morning. I'm looking for bullishness going into tomorrow to retest this 5,800. Now, there's also, if you go into SPX, there's a little trick I've learned. If you pay attention on option expiration day, you will see where the huge orders are. There is 5,800, 5,880, 40,000 SPX 5880 calls expiring 6:30. There were also, this was on March 31st, there were also 5290 40,000 contracts of 5290 SPX puts expiry. I know how to spell, I'm just not doing it. 6:30, June 30th. This was on March 31st when this order came in, and so here's what they do, man. This is excellent. This is amazing how they do this. So what do? They buy an option. This would be the giant banks. This would be J.P. Morgan. This would be the Federal Reserve if they play this game. I'm sure they do. They bought 5290 puts expiring June 30th. So what do? They open the day. They open the day at 5292. 5292. So what are they forcing people to do? They're forcing people to buy 5290 puts, right? To protect, to hedge. So there's 40,000 contracts. I don't know what it was at the time, but this is billions of dollars. Billions of dollars. They're forcing people to buy them. They bought them up here. They're forcing people to buy their contracts. They're going to push the market lower so that they get all of their 40,000 sold. I shouldn't be doing this. I'm not going to do this. But anyway, I'll look it up. But they're selling all 40,000 contracts, and then what are they going to do? They are going to rip the market higher so that all of those expire worthless. What else are they doing? While they're ripping the market higher, they're sweeping this fair value area, like we just said, and they bought 5880 calls expiring in June also. So what are they going to do? They're going to push it to 5880 also, and then sell all their calls for profit. So they made money, and then make sure before June 30th that they're below that but above this, so that they made money 4 times. Buying puts, selling puts, buying calls, selling calls. 4 times they made money on this. This is billions and billions of dollars. So if they come into this before June 30th, then we know that it's not going to break this again. They're not going to let that break. They're going to defend this area, and they're going to push it up higher, right? So keep track in June where we're at here. But I just don't see that they will let these remain in their possession red. They're going to push it back to 5880. So we have an opportunity here because they broke this prior pivot already without taking a break. They broke this prior pivot. They're going to rip it up to 5880, sell all their calls to other people, and then they'll let the market drop. Now at that point, they won't have these in their possession anymore because they've dropped it so far. They might be able to sell all of them. So if they've dragged it down far enough and they can sell all of their contracts, then they don't need to stay above this number and they can fall. So we're going to watch the volume of 5290 SPX puts and see if it breaks 40,000. If it breaks 40,000, then we know that the market's going to go lower. How about them apples? So don't go rushing out and selling your 401k tomorrow, because we're going to have one more opportunity to get above there. And we might even break these highs, put in a new high before the reversal. When I am screaming, when we're above 5880, when, not if, when we are above 5880 and I'm screaming, sell everything, that would be the time to sell everything. including your moving your retirement into safe funds. Let's take a look at bonds real quick because everybody's talking about bonds. Here's the thing with bonds. I don't see them being bullish just yet. Because where is the unfair value in this chart? This is TLT. Where is the unfair value? Is this a good buy? It looks like a good buy because there's a double bottom with a higher low, right? But where is the actual unfair value? Under here. Under this candle right here. 77.27. So we will see bonds move down with the stock market. And then at that point, once it sweeps the low, then we can start talking about buying bonds and have another bond bubble. So let's take a look at copper. So copper, I don't want to do this, but I'm going to do it. Okay, now this is CPR USD. So where are the areas of fair value? The first area would be this wick, right? So we can mark that off and say that's fair value. I'll make this a little brighter. So because they came down and filled this, then that's now fair value. Equal number of sellers, equal number of buyers. We have an overlap of this fair value area and this unfair value area. So now this entire thing is considered fair value, right? So what did they do? They came down into that. They never even closed a quarterly candle below it. See how that was a buy area right there? So then what did they do? They created from here. Obviously they came back down, so we know that's a fair value area. Now they came up here and broke. But what was this? This was unfair value. So they went lower, right? Where would they want to go lower to? They would want to go to the next unfair value area right here. Come on. Oh my goodness. Look at that, guys. This is on a quarterly chart, how this works. ICT is absolutely the best investment, not day trading, investment method, right? So it came down here, spiked it a little bit. That's on fair value now. So they're going to rip it higher. They came down to test it again. Now they've created a fair value area right here. That's up, that's down. So what were they able to do? Move up to the next unfair area. What did they do there? They moved through that area, swept it, and it was unfair. So where are they going now? This one's tricky because if this doesn't hold, if this area does not hold, this fair value gap does not hold again, then there is no unfair value until we get down to here. Let me get my magnet out. 312. That area is fair value, so we don't need to include that. What would 312 coincide with? My line tool. 312.10. Where would that coincide with? That would coincide with this fair value area, sweeping below it, finding unfair area here, because this right here, this wick, is considered a fair value area, right? There's an equal amount of buyers, equal amount of sellers. They would pierce this area and then be rejected, while sweeping this area, and then where can they go? New highs. Because then there is no reason to test any of this area again. And they will go from 312 to new highs. If for some reason 312 breaks, where would they be going next? Magnet tool on. 273 to 283. That would also be a good area to buy. So we have two excellent areas to buy. And the only reason that we would go down to this area is if we were to, for some reason, if we were to somehow come down here and then find resistance above it, then we will come down to this area. You'll buy in this area, either below it or at 50% encroachment is what he calls it, the 50% mark. Remember I talked about that? So 278. So we got 312 and 278 on CPR USD. If for some reason, again, that didn't work and they broke below it, what are we looking for? A rejection off of this area. And where are they going? The next place to sweep would be 197. Now, that's going to take a lot to get down there. So, what are we doing right now? Right now, it does not look like it, but we are still bullish. Copper is still bullish for new highs, because now we have a fair value area right here with this wick. This area is complete. This area is now complete. Where'd my thing go? There's an equal number of buyers, equal number of sellers. So all they have to do is sweep this bar and then rip it back higher. And where would they be going? This candle is now fair value. So they would be going for the high. And if they go for this high, 537, then you could say, okay, normally in a fair value area, they're going to shoot for 1.25 to 1.5 retracement. So you would say, let's see here. So let's do 1.25 and 1.5. Let's make those green. So this is on CPR USD. I usually use HG futures, but where would they be going from this fair value area would be 551 to 583. Those are targets, not places to short, right? That is if this area holds, this little green box. So now CPR USD I think is open. Is it open all the time, or is it just open during the day? Yeah, it's open right now. So look at this epic move today. This epic 5-minute candle went from 435 to 402, 403. That is nuts. And now we're at what? 446? 40-cent move in the evening in futures. This is nuts. So, what are we going to look for tomorrow? We're going to look for either they are sweeping this most recent, look, they've already done it, this most recent fair value area, they have swept that area, trapped longs, and what will they do next? This whole area is fair value. So where will they go next? From 446, they will go down to 403. And we have either 402, 396, and half of that from 402 to 396 is 398.90. We have in this area somewhere we need to be watching for a bounce. Now, they came up short of this number, so it's very possible that they intend to break through it, like I said at the beginning of the video. So let's keep an eye on that. But here's what should happen. This is a fair value area now. So either they will come down, find unfair value here and continue higher, or break through it and fall all the way down to this 398, 402, 395 area. If they fall down there, that would be a long-term buy for new all-time highs, according to this theory. Because this entire chart is now fair value all the way up to the all-time high. There is no reason to be trading any lower than 395. We'll see if that works. Let me know, John. I'll talk to you guys later.